Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are looking at metals and gold prices. Catch a little bit of a bid today, but still treading the $1,200 line they've been treading going back to early September. We've seen trades below, trades above, and it seems to kind of magnetically attract back to that 1,200 near settlement, and the market just continues to kind of wait and coil. We see the market forming some kind of a near potential catalyst moment back when we were trading 1186. Likewise, we were trading 1220, the range really going back for the last few weeks, and we haven't been able to see any follow through. So right now the market, again, coiling and waiting at near the midpoint, I should say, and near a very big psychological level. And if you look at the dollar, today the dollar helps. Dollar's been trending lower, really going back to mid-August, but today essentially we saw another push lower, helping metals across the board, but gold being obviously within that bucket, saw a nice bit of a bid. We traded up towards 1205. I think right now the dollar and metals have been kind of playing, the mirror image game. And I think the closer we get to some key data coming up, FOMC, forward guidance, maybe some of this trade talk gets more clarity, the emerging market world, we might see that start to separate again. But at least for now, they continue to trade tit for tat. When we see dollar go up, we see gold go down, and vice versa. Today being obviously one of those days where gold went up and the dollar went down. And lastly, let's look at positioning. Well, we had the highest number of spec shorts going back for a long time, going back to like 2002. But ultimately, we saw a lot of those spec shorts cover almost 40% last week, with the idea that probably don't want to go in with a massive short position if there's going to be some kind of shift in FOMC sentiment or policy. Now, yeah, we are expecting the Fed to raise rates 25 basis points. And yes, the Fed does seem to see things with a glass half full optimism. But I think that as we move forward, there's still a lot of uncertainty, not going out to December of 2018, but perhaps going out to June of 2019. And right now, the futures markets are a little bit uncertain. And I think some of those shorts that were covering last week in gold are a reflection of that, looking for perhaps maybe a better entry point if gold rallies and the dollar continues to sell off, or if things flip and the dollar is going to then continue to decline based on maybe not as aggressive, less hawkish Fed policy, then maybe there's going to be some bullishness, more of a bullish sentiment, and spec longs will flip back to spec shorts will flip back to spec longs. That's something that can happen any moment. We're right here, we're right on the line. We aren't seeing a great amount of bias. Yes, it is significant that spec shorts took control of the steering wheel, but certainly are not seeing the size that we saw from the speculators when they were long for the last several years. So right now, gold holding at 1,200, waiting for that catalyst moment. Could it be FOMC next week? This is Todd Colvin coming to you from the floor of the CME Group.